I think there has been a bit of a disconnect between the market observers, market participants, and where the BOJ stands, particularly when it comes to the dollar-yen. And I think the disconnect is that some market participants were thinking that the BOJ is more focused on dollar-yen than what it really is. This is not to say that they're not focused, but my sense is that they are more comfortable with the weaker yen than what the market thinks they are. What they are not comfortable with, particularly the policymakers generally, and here I would include the Ministry of Finance, is with a disorderly market. But I think there was a lot of talk earlier about the Bank of Japan acting if, for instance, the yen, back then it was at 140, at 145, now 150, 160. And I don't think that's the right approach. I think what the Bank of Japan is looking at is some of the homegrown indicators, particularly inflation, and they're a bit less sensitive on the actual level of the yen. They're more sensitive in terms of how orderly the market is.
Do you feel it's orderly at the moment? I mean, you know, if you talk about the absolute level, we're not even close to the year's highs. I mean, I think back in July we were above 160. Now, as you say, we're at 150. But do you feel the recent moves have been what you would classify in the orderly bucket?
Well, in the context of how the yen has been trading dollar-yen over the past 2 years, it has been generally orderly. I think it was getting a bit disorderly in the third quarter of this year. They have to intervene, even though the intervention was relatively futile. But just to try to get the market to be a bit more orderly. I think the dollar-yen is really kind of like a perfect price taker in terms of what the Fed does. At least that was the case till the third quarter of this year. My view is it will continue to evolve in terms of what the Fed does primarily. In terms of the Bank of Japan specifically, I think they will continue to hike, but very gradually. I see another hike in the next meeting or the one in January, and probably another hike in 2025. And I think that would likely be it for the Bank of Japan. So the dollar-yen will continue to depend primarily on what the Fed does.
Omar, positioning in 2025 in the fixed income space, whether it's treasuries, bonds or JGBs, where do you want to be on the duration curve? And separately, how compelling is the case for high yield?
That's a very interesting question. And I think for 2025, it's every year around this time of the year, it's very difficult to have forecasts. I think this year in particular is a year where policy risk is extremely, extremely high. My view, though, is I am willing to fade some of the Trump trades in terms of the fixed income markets, and the operating word here is really some of those trades. I think the treasuries will continue to be primarily driven by economic data and what the Fed does, and I think the trend there is relatively clear in terms of inflation abating. Probably the Fed will continue to cut, but probably more gradually than what was expected earlier this year. So I think the treasuries should gravitate lower in terms of yields. I think in terms of bonds, it will obviously still depend on the ECB, but I think in terms of the bonds, there's a lot that has already been priced in, so less bullish in terms of the bonds. And the JGB is an exception in the sense that this is the only really major central bank that's going in the other direction. So I think in terms of JGB yields, I would be less positive on them.